Hello everyone and welcome to today's session. So today we are going to start with a new chapter, that is chapter 4. Okay. And we will understand the topic which are enumerated in chapter 4 like materiality, risk assessment, internal controls. So we will go and do a deep dive in that particular chapter. We will understand the areas of related to the materiality, risk assessment and internal controls, and then also we will try to solve some questions on that. Okay. Now, we need to understand first why we are required, okay, to know about risk assessment. See, the first and starting point is the risk assessment. Now, let's understand what is risk assessment and, kind of what makes a risk very critical for the company. Now, how many of you are aware that on what methodology we do our audit? So, on what methodology we are carrying our audit? We are doing our audit. Anyone? What methodology it is on which we are doing our audit? Come on, guys, quickly. What is the methodology on which we do our audit? Pretty much basic thing that we are starting with. Anyone? Sample basis. Okay, good. And on what basis we select the sample, Mr. Yerugondalu? Like on what basis we select the samples? Like what is, the key factor that, plays an important role in our audit, which helps us to design, what audit procedure we need to perform. Anyone? No? Okay. So, majority of our audits, or not majority, all of our audits are correct, Charu, risk assessment, are risk based audits, are also known as RBA. Okay. Now, what is risk based audit? Anyone? What is risk based audit? You guys tell me. What do you think is a risk based audit is? What is a risk based audit? Anyone? What is risk based audit? The basic thing of the audit that we need to understand here. Good, Mr. Good, Charu. Very good. So procedures and method that are applied, okay, during the audit are based on the assessed risk of material misstatement. So whenever we say the general overall objective of the audit, okay, if we, in the previous chapters also we have discussed the overall objective of the audit. Now, whenever I say overall objective of the audit, if you see the word, material misstatement comes into the picture. And material misstatement is something, based on your risk assessment. It's based on the risk assessment. So when I say overall objective, what is the overall objective of the audit is that to, somewhere also to obtain reasonable assurance about whether the financial statement are free from material misstatement, whether due to fraud and error. Okay, now to achieve that, in order to achieve that, I will just keep it here. Okay, in order to achieve this particular thing, wherein I say I want to obtain a reasonable assurance with respect to statements are free from material misstatement. Financial statement are free from material misstatement. How do I identify material and misstatement is something, one of the three, like out of three, the two parts of the particular chapter. When I call it material, the material gives me, detail about materiality. So that gives me about the concept of materiality. But when I call it, as a statement, like what statement it is, a misstatement basically. Now, misstatement are, something that I have to identify based on areas with the higher risk. Misstatement are to be based on, areas having higher risk of misstatement. So understand, when I call it material, I'm talking about materiality. Again, that goes to my essay 320. When I call it misstatement, I have to identify that they are free from misstatement. Whole, as they are free from misstatement. Okay, whether due to fraud and error. And for that, I need to identify the area which is having higher risk of misstatement. Now, when I say having higher risk of material misstatement, for that, what I need to do is simple. I need to perform risk assessment. Okay, to identify areas of higher risk of material misstatements. And again, if in order to identify higher risk of material misstatement areas, whenever the word material comes, I need to use materiality. So to identify higher risk of material misstatement, I need to perform risk assessment plus I need to use materiality. Okay. Now that is something basic I'm talking about. Here in this chapter, what we will learn is what is risk assessment, how to use materiality and how to define materiality. That is something covered by essay 320. But when I call it risk assessment, I will be dealing some portions of over here essay 315 plus 330. Okay. And some, topics which are more kind of advanced topics with a practical example. I'll show you that. Okay. Now that is the basic that we have understood till now. Okay. Now, as you know, there are various type of risk. In risk assessment, what you do is you identify risk. But to identify a risk, you need to understand what are the type of risk. Okay. So identification of risk. Okay, tell me how many type of risk are there? Quickly, how many type of risk are there? We are going to basics. How many type of risk are there? Or audit risk? Okay, tell me the component of audit risk. Components of audit risk. Which are the components of audit risk? Good, Salish. Come on, guys. Come on, quickly. So you might have already seen this one, like audit risk is equal to inherent risk into control risk into what is the third one? Correct. Detection risk. Okay. You might have already seen this. Okay. Like audit risk is equal to inherent into control into detection risk. And when I say uh, inherent and control risk, when I talk about only these two, I'm not talking about as of now detection part. I'm talking about inherent and only control risk. When I talk about these two parts together make it for me is a risk of material misstatement. This is the key term that I was looking for. Risk of material misstatement. Now understand why. So what I say, what is a risk? A risk is something which could go wrong. Okay. Now when a particular item can go wrong, when there is either inherent risk, like there is something gap in the system, or there is in the due to the business process, or there is inherent risk present, complex calculation, high value, okay, which increases chances of something could go wrong. And control risk means the controls are not mitigating that risk. When I say something could go wrong in business, that is an inherent risk, but there is a control also which is not stopping that risk, which is not stopping that something which from going wrong. Okay, hypothetical example I'll give you. So, simple out of the audit example, you are planning to go on a trip to Goa by road, from Mumbai. Okay, you are planning to go on a trip to Goa by road from Mumbai. Okay, that is the first thing. Okay, now in this particular trip, in this particular trip, okay, you tell me what could go wrong. Now I'll give you some classifications or some heads to say what could go wrong with car, what could go wrong with budget, what could go wrong with stay, road journey. Okay, there are some heads I'm already providing you. Kind of. You tell me what could go wrong over here. What is the risk in this particular area or in this particular trip? Just run the imagination. That's it. I'm asking. What could go wrong in your trip from Goa to Mumbai? From Mumbai to Goa. Come on, guys. Try to run the imagination. What could go wrong when you are going on a trip from Mumbai to Goa by road? What could go wrong with car, with budget, with stay? Any idea, anything. Very good, Geeta. Okay. So when I say car, I can say flat tire or puncture. What else? Okay. When I say stay, I say availability of preferred meal like veg, non-veg option. Okay. What else? Breakdown of car. Fine. Breakdown of car. Fine. Exceeding the budget. Overspending, I will say. Overspending. Okay. Good, Yedo Uh, overspeeding, overspending. Yeah, that's there on Chica. Very good. High prices, Geeta. Budget increases due to high prices. I could say wrong estimation. Wrong budget estimation. What else? What else do you think can go wrong? Come on, guys. What could go wrong further? Road are prone to accidents. Okay. I could say roadblock due to accident. Roadblock due to accident. Okay. Technical problem. Agreed, Rajesh. Very good. Okay. Now we have got a lot of examples with us. A lot of examples with respect to what could go wrong. Now let's say, for example, when I talk about, that what could go wrong when I say flat tire or a puncture. Okay, when I say breakdown of a car, and and when I say overspending. So we usually do some things before start of the journey. For example, when I say flat tire or puncture, you check tire pressure before you start your journey. Checking of tire. You go and check, oh, just see how much of the, this is what you say, air in the tire. Like you go to some nearest pump or somewhere, you check the tire, what is the pressure, and then you start your journey. Breakdown of the car. Usually we, get it serviced before journey. Okay, some people have added, okay, we are going to Goa. It's a long road journey. Let's get our car service and then we will go. Okay, fine. Overspending. 90% of the trips happen with the overspending, but what you do, you plan, okay, you have a planning, and someone might be in your team, or kind of, group that will be in charge of this budgeting and everything. So he will be doing planning and budgeting just to understand how much amount to be spent, what is the thing. Now, wrong budget estimation. What you do for that, you generally, see that you discuss within yourself. Discussions happens. Okay, discussions happens that, okay, this is thing, this is not. Availability of the preferred meal. You usually reconfirm these stay details with hotel. Or nowadays we just check on the app, okay, everything is appearing good, fine, good. Roadblock due to accident. Before leaving in the morning, we check Google Maps just to see what is the time to reach the location. We do all this stuff. We do, you guys told me the problems. I told you just, some things that we already do still. Okay. Now, for example, before leaving for the journey, we check for the tire pressure and everything. Still, sometimes we get puncture. Sometimes we get flat tire. Okay. That is unavoidable, correct? Means even after, I would say, even after this particular portion, even after checking that, okay, what is your tire pressure, there are chances that you will get puncture. Do you agree with this? That even after checking the tire pressure before you go on a journey, there are high chances that in the journey you get a puncture. Do you agree with me on this or not? Come on, guys. Do you agree with me that even after checking a tire pressure before going to a journey, there are chances that you still find a flat tire? Okay. Geeta, Yidukundalu, Vanchika, thank you. So, when I say that there is a risk, understand? I say when there is a risk, this particular one, that tire pressure, flat tire is a risk for me. What I'm saying is that when I have a risk, inherent risk in the business, okay, I have an inherent risk, but I have a control of checking tire pressure. But even if there is a chance of going tire flat or a puncture, so I will say that is nothing but my control risk. That, I might have not checked the tire properly. I might have done it carelessly, or there are some other factors which are impacting. So there is a control risk. You just now said yes, that after checking the tire pressure also, there are chances the tire may go flat. Same way. So overspending. I'm 100% sure that before each and every trip, Everyone does a planning that how much amount to be spent, how much amount to be contributed, and whatsoever, total budget of the trip. But every time it goes overspending in the bucket, every time it becomes, you exceed the budget of spending, you exceed the budget. So there was an inherent risk of overspending, and you had a control of budgeting and planning, even I would say continuous monitoring. That a lot of people, continuously monitor how much spended, how much amount is left, how much we can spend more, a lot of things. But still, most of the tips end in overspending. Why? Not going on the trip side, but that phenomena, that situation itself is that when the inherent risk is high and the control is not able to prevent the risk from occurring. And when I say these both together, that control is not able to prevent the risk, inherent risk is high, that is the material risk for me, or high risk for me. That, okay, high chances of the risk. I would say, in other words, that is something I call as a risk of material misstatement. Now the question comes is whether this risk of material misstatement is on the higher side or is on the lower side. Okay. Why? The reason because the number of occurrence, like of, let's say, if I ask you, do you think the number of occurrence of tire puncture is equal to the number of occurrence of a car breakdown on a journey? How frequently you find a tire puncture and how frequently you find a breakdown of a car? Do you think both are same or both are different? Breakdown of a car and tire puncture. Is the occurrence same? Come on, guys. Do you think the occurrence is same for both of the cases? Both are different. Correct? Both are different. Let me bifurcate between both. I will tell you one thing. Tire puncture, car breakdown. Okay. So let's say occurrence. This is frequent. I would say this is rare. Okay. Rare occurrence, and that's a frequent occurrence. Impact on journey. In terms of, you can say, time, or in terms of cost, both. So let's say impact on journey in with respect to time, or impact with respect to cost. Okay. Now you tell me what could be the impact of tire puncture with respect to the time. How much time it takes to get it repaired? I know I'm going, I'm discussing an example which might not relate to audit, but I'll come to a point that what we are discussing. Trust me. You tell me impact on journey in time, like how much impact it could have if you have a tire puncture, like how much time it will take to get it repaired. Come on, guys. Maybe 5-10 minutes. Good. I'll take a range for multiple answers. 10 to 15 minutes. Perfectly good. Yeah, perfectly fine. I may say 5 to maximum 20 minutes. Okay. How much it takes for the car breakdown? If there is a car breakdown, then how much time it takes for getting it repaired? Sometimes break could go more than a day also. So I will say it may take 2 hours to 24 hours. Hypothetical example. I don't need accuracy over here. We are not going to start a garage, but hypothetical example. Okay, 2 hours to 24 hours for a rare incidence. Good. Now, what do you think could be impact of or in cost? Like how much amount you paid for a tire puncture? How much amount do you think? How much amount do you think you can, you have to pay when there is a tire puncture in cost? I think they charge somewhere around 100 rupees per puncture. 100 rupees per puncture. So basically, let's say it may start from 100 to hypothetical example 2000 max. Not it will go on not beyond that. You can't have more than 30 purchase punctures one time in your tire. Otherwise, you need to get it replaced. Okay, so 100 to 2000 rupees per per time, one time. Now, when I talk about car brake, the cost might go from 5,000 to a normal, not even 5,000. The services as of now today, I remember it was 12,000 somewhere. 12,000 to it may range up to even 50 to 60,000 rupees. Okay, let's say I'll approx keep it 60,000 rupees. Now, when I combine these together, when I combine these together, I actually call these two things. Okay, the impact is nothing but for me is a magnitude. Again, impact is nothing but a magnitude for me. This is nothing but magnitude of risk. That whenever the risk will happen, what will be the magnitude of impact? Okay. And when I talk about this particular area, this is nothing but the likelihood of occurrence. That how frequently a risk can occur. Okay. How frequently a risk can occur and how what is the chances of the risk being there or occurring. Okay, you can easily identify what is the chance of having a flat tire compared to a rear breakdown. So that is something as of now, but when I have to identify what, see, I told you both are risk for me. Both are risk for me, risk of material misstatement. Reason because even after getting it serviced, even after checking tire pressure of the tire, there are high chances that it will occur. There are high chances it will occur. But now I need to rate that risk. Again, I need to rate the risk which is more critical for me, whether car breakdown or tire puncture. See, what I will do is simple. If that is happening frequently, okay, and I need to just, see all these three together to understand whether it's a low risk, medium, or high. Okay, I might call this as a low risk reason because although it is frequent, the impact is very low. The impact is very low. It might get, create a delay for 5 to 20 minutes with a cost of 2000 rupees. I still count as a low risk. But this incidence over here with respect to car breakdown, boss, this is for sure high risk. Because a car breakdown can result into your end of the journey sometimes, because it may, your car goes into the service station and done for 15 days, you're gone. So this is a high risk for me. I already told you guys that these are the risk of material misstatement. Now when I say this is low, so I call it low risk, but when I say high, when I say it high risk of material misstatement. Okay, so this is how I do the risk assessment. I identify. So now coming back to my topic, that was identification of risk. I told you that okay, audit risk is something inherent in control risk. We understood what is the risk of material misstatement, that there is a risk and the control is not able to stop the tire puncture. Okay, means there is a risk of material misstatement. And I assess each and every risk. Okay, each and every risk on the basis of two factors. One is likelihood of occurrence and magnitude of impact. This together helps me to rate the risk from high, medium, low, or kind of helps me to identify significant and key risk. This helps me to identify significant or slash key risk. Are you getting my point? So we just now saw what is a risk, how to identify a risk, and how to say which is a risk of material misstatement. Clear? Any doubt till now? Any doubt? Any doubt, guys? No? Okay. That is something we understood what is risk. Okay. And what is risk of material misstatement, what is likelihood of occurrence and magnitude of impact. The basic fundamental to start the topic. We were talking about something called as a risk-based audit, from where we came to the risk assessment, that each what like we went to the overall objective. Okay. Overall objective was to obtain reasonable assurance with respect to financial statement are free from material misstatement. Okay. And to identify the misstatement, I need to identify the areas of higher risk of material misstatement through risk assessment and using materiality. Now, what you guys did here, you know, identifying the risk. This is the first step of the risk assessment. When I talk about risk assessment, it's nothing but the, identification of the risk. You identify the risk within the risk assessment. Okay. So you identify a risk, you rate the risk. Okay. And on the basis of that, you create a response for the risk. That is a risk assessment basically. Correct? You identify, you rate, you understand the risk. Okay, you break down which are the significant and key risks. Like you might say, okay, this is very important for me. This is very important for me. Okay, wrong budget estimate, something we will see later on. Availability of the preferred meal, that is not that much important for me. Okay, again, roadblock, this is very important for me. Okay, so I can, might bifurcate between various categories. Like, okay, availability, I'll check later on. If that is, I'm flexible with both. Okay. Flat tire, I'll see in the road if there is some issue. Otherwise, I'll leave it. Okay. So you understand which are the key risks. You identify the, critical risk, and you identify which are normal risks for you. You are doing nothing but the risk assessment, that you are identifying which is the important risk, which risk to focus more, because it has a higher likelihood also, or either higher impact. So just a minute, let me add a slide over here. It's pretty simple when it comes to the risk assessment. Let's say on a graph, okay, if I have to plot likelihood and occurrence, likelihood and magnitude. So let's say on y-axis I'll place magnitude of impact. On x-axis I will place likelihood of occurrence. Okay. Now I will divide this particular into 4 quadrants. I'll tell you why. Into 4 different segments. Now, the first segment that I want to discuss is the place where you have a lower risk of material mistake, lower risk basically with respect to likelihood and with respect to magnitude. This particular area, I am saying this area, okay, I have a low magnitude and low likelihood. Magnitude is low, likelihood is low. So the overall assessment of the risk will be, so risk will be low here, because I have a lower magnitude, I have a lower likelihood. Fine. But I'll go to the next quadrant. Okay. When I say either I have a higher magnitude or I have a higher occurrence. So this one or this one. So here I am saying that the magnitude is high, okay, and the likelihood is low. So I could call as a medium risk for me. Here also I have a magnitude as a low, a likelihood as a high. Again, I will call it as a medium risk for me, kind of. Okay, because the chances of being occurring the risk is high, but the amount involved is low. So somewhere I will call it as a medium, low medium risk. Okay. Now the last part of this particular quadrant is high high. Actually, you the people then say high high. So that is high high. From that only it came. That you have a magnitude which is high, likelihood which is high, and the risk goes to high and people say high high. Okay. This is the risk that is something for me high risk of material misstatement. So based on this, I understand what is the risk over for me, what is the risk for me. Okay. With respect to magnitude and with respect to likelihood. Once I rate a risk with the high, medium, low, something on the similar line, I need to, do a risk assessment. Oh, risk responses. Clear? Any doubt? Any doubt anywhere? Guys, what we are doing here is understanding the basic as of now. So do not hesitate to ask doubts. I'm purposefully taking some time to explain you in detail. Any doubt, guys, any doubt, do not hesitate to ask the doubt, please. If you are not clear with the concept, please ask. Okay. Now, in practical scenario, in practical life, when we do the audit, okay, how we implement this, I'll tell you with an example. I'll show you with an example with a particular, file, I could say, which will give you a clarity on, like what is basically, just a minute. Yes, let me open the file. Okay, let me share my screen just a minute. Okay, I'll tell you how do we perform the risk assessment and what is the risk RCM. So I'm just talking about as of now is RCM, risk control metrics. Okay, we are talking about risk control metrics, RCM. Now, what is that RCM? magnitude. RCM is nothing but, I'm just, taking to a practical example. RCM is nothing but, a file or a matrix wherein, all the information about the risk control is there. I'm, showing with you with an example that somehow on a similar lines, RCM looks like. Okay. So now what we are going to do is whatever we learned, whatever we understood with respect to the car, we will implement on the financial statement. We will implement on the financial statement. Okay. So usually, let's say for example, so I have taken some headers over here. I'll explain you what is these scenarios, what are these headers. Okay. So basically, see, I will just, place some areas over here. Okay. Some areas from the financial statement, their sub processes, their risk, and then we will discuss what could be the inherent risk in that case, what could be the controls and what could be the control risk and overall the risk of material misstatement. Okay. So control description, I'll say control risk and risk of material misstatement. Fine. I'll keep it as of these two. I'll keep it blank for the purpose of remote as of now. Okay, let me remove. Fine. Now, when I talk about this particular, inherent risk, I told you that I have to specify the inherent risk on two bases: likelihood and magnitude. Okay, what will be the likelihood and magnitude of the inherent risk? So that is there. Now let's start filling up, with respect to the financial statement. Let's say, for example, your area purchasing. And in that sub area or the process that I'm looking for is, let's say, for example, hypothetical example, you can say sub area is kind of invoicing. Okay. Or PO invoicing. You enter invoice into the system. Okay. Process description. Kind of. Or, when you perform a walkthrough, you write what is the process that a person enters in PO invoices in the ERP. Okay, I could say the risk for me here with respect to this area. Okay, the risk is that inaccurate entry of PO invoices. Inaccurate entry of PO invoices. Or I could say, another risk for me. There could be multiple risks in a particular area. It's not necessary that you have only one risk. I could have an unauthorized entry of an invoice. Means what I'm saying is that the person was not supposed to enter the invoice. That invoice is not, genuinely of the company, but still the person is entering the PO invoice in the system. Okay. Inaccurate entry or unauthorized entry of a PO invoice. Okay, I'll give a ID. Let's say invoice processing 01, IP 02. Fine. Now, the question comes is what is the likelihood and magnitude of the occurrence? Okay. Now, how do you identify the likelihood and magnitude in this case? So you tell me, how will you identify the likelihood of inaccurate entry of PO invoices? How will you identify the likelihood? Come on, guys. Let's give an example. Like some try to give some example. How will you identify the likelihood of inaccurate entry of invoices? How will you identify that? Anyone? How do you identify the likelihood of occurrence of inaccurate entry of PO invoices? This one, what we are discussing. Come on, anyone? The way you check likelihood of a tire puncture, the same way you have to check over here. Try to apply some logic, logically. Like I don't want the perfect answers. I want you to give an answer. That is the objective over here. Give an answer, not a perfect, not the correct answer. I don't need it perfect or correct answers. But I need to see answer from each and every one of you. How do you check likelihood of inaccurate entry of PO invoices? Come on, guys. Very good, Geeta. So, if I can identify if, the invoice is entered incorrectly, date is not mentioned properly, incorrect serial number. Very good. Okay. Rate and quantity. If they enter rate into quantity, okay. Data validations into the system. Okay. So, my question is that how do you identify the likelihood of occurrence? Means, how do you find out chances of getting invoice entered incorrectly? So what is the chance here? If I ask you, okay, tell me the percentage or the probability of kind of occurrence, probability of. So I'm just asking, like, okay, what do you think could be a probability of occurrence in this case? Like, how do you identify a probability of any of the thing? Like, if I have to tell you, okay, identify the probability of occurrence, that the chances that a person will enter inaccurate PO invoice in the system. Come on, guys. I'm just asking probability of occurrence over here. Okay, Manoj, very good. Let's say, for example, if in some days there is an India Netherlands match, so you might have a probability that chances of winning which team might win. Okay, so different. Like for example, India will have a different chance of winning compared to India South Africa or India Australia after yesterday's match. So that's why the probability is based on something. How will you identify on what basis the probability is there in the current case? Like how can you calculate the probability? Very good, Charu. Probability can be estimated based on the prior work of that employee. Perfectly fine. Okay, perfectly fine. Let's say, for example, when I was talking about, again, I'll go to a basic point. Uh, Let me take a cricket match. India versus Netherlands. When I have to check probability of winning of India, okay, I have to see based on, okay, how many matches Netherlands has, won, how many India has won, past track, past history, performance, and on the basis of that, there is a prediction whether India will win or Netherlands will win. Home ground, like, okay, where the match is being played in India or in Netherlands, whether players, how the players are, being, a lot of things are there, a lot of things. Same way, if I shift with India, Australia, or India, South Africa, India versus South Africa, I again, the probability will change based on these factors. Okay. Now, same way in our case also, when I talk about inaccurate entry of PO invoices, I need to identify certain factors based on which I can do likelihood or probability of occurrence. And generally, the factors can range like, I'll remove this one, not required. So when I talk about inaccurate entry, I could say the factors for identifying occurrence or likelihood could be number of invoices processed wrong or inaccurate out of total invoices processed. Okay, kind of. So what I'll do is, okay, the number of invoices which are processed inaccurately out of the total number of invoices. Let's say the total invoices were 100 and the wrong invoices processed, inaccurate invoices was, let's say, hypothetical example is 5. So I could say there is a 5% likelihood. Then what I could say is, okay, let's say 0 to 20% is low, 20 to 60% is medium, and 60 to 100% is high. Okay, I could bifurcate in range and now I can see, okay, this is falling in the low. So I can go back and say, okay, this is low. Fine, good. Now, the second question on the similar line is, how do you identify the magnitude? How do you identify the magnitude of impact? How do you identify the impact, magnitude of impact? Again, I want answer. I don't need a correct answer. It's fine if you can give me an answer, but perfectly fine. I don't need a correct answer. How do you identify magnitude of impact? Come on, guys. By checking invoice value, very good, Mr. Rukundalu. Very good. Very, very good. by checking the invoice value. So for example, what I will do, hypothetical example, if I tell you here, okay, what I will do is, let's say for example, I had 5 inaccurate invoices. So what I can do is their total value divide by 5, this 5 over here, okay, and then what I'll get is average invoice value. I could say this is the impact. This is the impact or magnitude at the occurrence. Okay, something which could go wrong with the each and every processing impact, processing. Or another way is I could do is total amount. This is or for this particular approach. Total amount of invoice processed into this particular rate, 5%. Let's say this is something 50 lakh rupees into 5%, which will give me oops, just a minute. Which will give me 2,50,000 rupees. Okay. So either this is the way or this is the way. I can identify the average, okay, impact. Now, if this is the impact that I'm identifying, 2,50,000, again, now from where I will understand the magnitude. This magnitude, the way I had this range, okay, for the likelihood. Same way, I need to have a range for magnitude. But the point is, when I come to an amount for a range of a magnitude, that is something, this particular is something coming from materiality. Materiality helps me to decide the range. Okay. So materiality helps me to decide the range. Let's say, for example, my overall materiality. Okay. Overall materiality is something, let's say, hypothetical example is 25 lakhs. So something beyond 25 lakhs, it's highly, high magnitude, high. So if I say 25 lakhs and above, sorry, is very high for me, which might require a qualification. Then I would say, okay, my performance materiality for a particular area could be, like, say, for example, 25% of this, 25% of 5 lakh, 25 lakh, something 6 lakhs, 25,000. Okay. Now this performance materiality, I could say 6.25 to 25 lakhs. Something is a medium category, and below, you do have a range, let's say 0 to 6.25. It's a low. Hypothetical example, just hypothetical. So now I need to understand this 2,50,000 where it is falling in this particular hierarchy. If I say it is falling in the low, so now I have a low risk, but let's increase the value of this for better understanding. Instead of 50, let's make it 100 lakhs, 200. Yeah, 200. Okay, so now I have a 10 lakh rupees. Now 10 lakh will fall under the category of medium. So I'll say this is medium. Some people might also, come with a different range. Kind of, they say, okay, 0 to uh, 2 lakh rupees is low, 2 lakh to let's say 6.25 is medium, and beyond 6.25 is, and whatsoever number is, okay, and above is high. Some people might take the ending limit is performance materiality. And we will understand what is this performance materiality and overall materiality when we will understand the materiality concept. So they might take up this range. Both are fine. And which range to take is something we call it as a professional judgment. Your judgment, whichever range you want to take, but that should be professional judgment based on certain factors and understanding. Okay. So now I have a low and medium. I have a low and medium. So let me add one more column here. This gives me overall inherent risk. Let's say low medium will give me medium. Remember the quadrant that we had, 4 quadrants. So if it is a low medium, again, like it will give me like, if I take that only, this example of quadrant. Okay. If I follow this, it's with a low probability and medium impact. So this one, the above one. So it's again will give me low overall risk. Fine. Very good. I understood till here. Same way I will perform unauthorized one. Let's say for example, I get it low and medium here also, and I have a low and I have low over here. Fine. Same way. This is the part I call it uh, identifying and assessing the overall inherent risk. The first part, basically, where you identify what is the inherent risk. Okay, you identify the risk. The second part is a part where the control is there for this particular one. Okay, and this will become my first part. Fine. Now coming back to the second part. Now when I say second part, I need to understand in second part what is the control, what are the controls which are placed over here. Okay, I need to understand the controls which are placed over here so that I can assess what is the control risk. Okay, I can assess what is the control risk over here. So the way we were identifying controls, and when we are going on a trip, same way we need to identify the controls over here which are there in the process. Let's say for example, there is one control. When I say inaccurate entry of PO invoices, there is a maker checker control, that someone prepares the entry into the system and someone checks the entry, maker checker kind of control. Okay. Uh, in other words, if I write it down, I could write that each invoice entry prepared by accountant is reviewed by manager. Each invoice entry which is prepared by the accountant is reviewed by the manager. In here, I could have, see again, in front of one risk, I could have multiple controls, or in front of multiple risk, I could have one control. So same way this one, in this scenario, a person enters PO invoice into the ERP. Okay, now there is a risk of unauthorized. This is the same particular process. So I'll merge it for your clarity.
Play from Harshat's PC.
Sorry. So I'll merge it for your clarity. Now I'll say, let's say this particular control, each invoice entry prepared by accountant is reviewed by manager. And if I call it reviewed and approved by manager, then again, the risk of, unauthorized entry also get it, nullified by the control. Are you getting my point? I have single control that the invoice is reviewed and approved by the manager. That helps me to mitigate the inaccurate entry of PO invoice risk. Plus, it's helped me to mitigate the unauthorized entry of PO invoice risk. So this is helping me in mitigating two different risks. One control for two risks. Okay. Now, coming to the part of control risk. Control risk means that how much the control will be able to detect and how much it will not be able to detect. See, again, the question comes on that nothing is, risk proof. There is no guarantee of 100% that you will cover everything. There are still chances that control might not pick up. Same way we saw in the tire example. Get it checked. Okay, every time before you go on a trip, you get your tire checked. But still, there are chances that you get a flat tire. Same way, doesn't matter if you have a control, but there will be some chances that there will be some miss out from the control itself. So you can say kind of the control will not be able to detect the particular issue. What if I say that the person who was reviewing was careless, he missed out some details and inaccurate entry happened. But again, that we need to understand what is the control risk in front of that. How much of the chance is there for happening that error? So I will map control risk for these two things separately. Let's say inaccurate. So occurrence of control risk, or the control risk is kind of medium, I will say. That uh, the supervisor or the manager might approve an invoice which is accurate. He might not, just see the details. He just click the OK and get it done. But unauthorized is something, that is the chances are being low. That, unauthorized entry of a PO invoice means the invoice was not supposed to be entered, but still he entered. Now there is a review process in there. Manager reviews everything. So there is a less chance of unauthorized entry, but higher chances, slightly higher of inaccurate entry. Okay. Till here, are you guys with me? Any doubt? Any doubt with respect to this? Any doubt? So now I entered a control in front of the risk. I identified a control in front of the risk. Till here, any doubt? I identified a control risk also for this. This is medium. This is low. So I'll mark it low as a good one, like, green one, because they are low risk. Medium ones are kind of, I'll keep it different color so that you can understand. Any doubt? Good to go? Okay. Now comes the last part of understanding the risk of material misstatement in terms of audit. What I told you, what is risk of material misstatement? IR into CR, inherent risk into control risk. You have an overall inherent risk over here. You have overall control risk over here. Same, you need to apply this quadrant only. The thing is simple. Like, if the inherent risk is low, okay, and the control risk is medium, it will go to the medium. But medium, again, I'll multiply, I'll keep it medium only because both are medium. Low, it will be low. So the risk of material misstatement for these items will be this one. This medium will make it medium. This low will make it low. I'll add one more example from start to end, again with respect to purchasing only. Let's say non-PO invoices. Okay. So a person enters non-PO invoice, okay, into ERP. Now, here I could have another control also, three-way match, PO, GRN and invoice, but I'm not talking as of now because I want to keep it simple. Let's say a non-PO invoice. PO is something you have a purchase order in front of that, but non-PO, same, you don't have a purchase order. So inaccurate. Same risk will be there for the non-PO. Now, where you don't have a purchase order, the chances of unauthorized entry increases. Understand that thing. A chances of unauthorized entry and inaccurate entry increases. So instead of probability of low, I will keep it medium. Magnitude, I will keep it medium. Same way, I can say, let's say, okay, keep it high as of now, the impact. I'll say the invoices which are processed kind of have a high impact. I'm just showing you the combinations. So medium high, if I have a high magnitude and medium likelihood, high magnitude and medium likelihood, somewhere it will go to high category. Okay. Because there is a high and medium, it is high. So I have a high magnitude and medium likelihood. So I'll rate it as a high. Okay. High and this will become medium. Okay. So high and low, medium and medium high will give me high risk. Okay. Again, people can say this is medium. People can say this is medium. That is professional judgment. I'm not talking about professional judgment as of now. I'm just taking a hypothetical example. Let's say I have another control for this. Another control is same way. This is the control. Each invoice is being approved by manager, and in this case, each invoice entry prepared by accountant is reviewed and approved by two managers because it's a non-PO invoice. Let's say to have it something different, it is approved by two managers. Now the question comes is that if it is reviewed by two managers, then the chances of going control risk, that chance of missing something is low. Okay. Chance of missing something is very much low. So in that case, I could say high and low, same like this, will become medium. And medium and low. Okay. Medium and low, you can either call it medium, you can either call it low. I'll call it medium. So the overall risk of material misstatement is for medium for me. Like this way, I identify what is the risk of material misstatement for me for a particular risk. Clear till now? Clear? Any doubt? Any doubt? Any doubt till here? Yes, no, going from above. Are you guys understanding this? No, Geeta, you don't have to make this in exam. No. This is for your understanding. This is something you do when you do audit in your practical life. This becomes part of your working paper. You don't have to create this format in exam. No. How will you create in Excel? No, no, no. So this is just for your understanding. Okay. When we do audit in real life, we create this RCM, that is risk control matrix. Okay. For each and every business, each and every audit. Okay. Each and every process. So that, we can understand what is the risk, what is the controls are there, and what is the overall risk of material misstatement. This is something you have already seen in the intermediate. I am just revising, refreshing the topic so that I can build up from here. Good to go till now? Okay. If it is good to go till now, I would say, okay, keep it here. Let's take a break. Okay. Let's digest this one, process this thing so that I'm going to make it more complex after the break. We will include assertions in this matrix now. We will understand how assertions works with respect to risk, and then we will see how to create responses to this risk. Okay, so let's take a quick break of 10 minutes, and after the break, we'll come back. Hello everyone, welcome back. Okay, so we were discussing about the risk assessment. We were discussing about the risk of material misstatement and how to identify that. Okay, now there was one question whether the magnitude affects more compared to the likelihood. In some cases, yes. In some cases, no. That totally depends upon the type of risk. I'll tell you why. Let's say, for example, invoice processing. If I say the magnitude, okay, of getting a wrong invoice processed is higher compared to the likelihood. When means I say I have a multiple likelihood, but the magnitude of each invoice getting inaccurately processed is higher. So the total all I need to see what is the total impact on my misstatement. So let's say the chances, like I was looking over here, this amount. Let's say the chances of this particular thing, okay, the impact, the material misstatement, or the risk after the magnitude could be this one. But if say there are chances that in 90% of the cases the control will detect this thing, then I will apply 90% and the rest 1 lakh rupees will be the net risk or potential misstatement for me. So this 10 lakh amount, like in front of 20 lakh and the occurrence 5%. So this this total amount and the likelihood together, they decide this amount, and this amount of magnitude somewhere also helps me to understand what kind of risk I could have. For example, when I say this amount, this average invoice value over here, okay, let's say total invoice value of incorrect processed invoices was 50 lakh rupees, or not 50 lakh, let's say it was 20 lakh rupees. For example, hypothetical example, 20 lakh rupees. And if I divide by 5, okay, I will get an amount, let's say 4 lakh rupees. So this 4 lakh, I could say, okay, can be an average of one particular invoice being processed inaccurately. Now, I told you that there are chances that 5 invoices could be processed inaccurately. 5 invoices could be processed inaccurately on overall basis. This was a past number. Now the number I'm expecting is this time it could go to 7 invoices. So I'll multiply both. Okay. So let's say, for example, after multiplying, I get 28 lakh rupees. So this is something, this magnitude, this likelihood together decides the overall risk. Now, let's say, for example, I have only, instead of 4 lakh, I have rupees, let's say 20,000 only. Although your likelihood could be, high, medium, low, but the amount is so low that even after multiplying the high likelihood, your total number is below the par, below the amount that you are worried about. So you need to see in combination. One in standalone does not make any sense. So, for example, let's say average inaccurate invoice is rupees 200 only. Now I see there's a huge likelihood that the chances of inaccurate invoices are 2000. 2000. Okay, so total potential misstatement could be multiplication of both, that is 4 lakh rupees. Okay, now after having so high and this is being so low, this will come somewhere in between, either medium or low. Because if, let's say, for example, that depends upon the category also. In a company, let's say in that category, the number of transactions, number of invoices, or number of, you know, uh, potential impact or potential occurrence are low, then even though if you have a high what do you say impact or high magnitude, your overall risk is going to come low. Or otherwise, let's say you have a high likelihood, very high likelihood, but the potential impact on magnitude is very low, very low. So overall, it is going to be low. So you need to see in total both, not on standalone level. Clear? I hope it is clear now. Let me save the file, otherwise it will get crashed. Okay. Now we understood till this point. Now I want to introduce you to the concept of the assertions. Okay. And how that is important, that we'll see. So when I say risk of inaccurate processing, do you feel that risk is there on all the assertions? And even, before going to the assertions, tell me how many assertions are there in respect to a transaction. What assertions are there? Which are the assertions on a transactional level? Come on, guys. Assertions on transactional level. Which assertions do you think are there at the transactional levels? You might have already seen in the interview. There is nothing new. Come on, quickly, guys. Which assertions are there at transactional level? Anyone? You have already seen in intermediate. I don't think so. That is still that much difficult. Come on, guys. Come on. Which assertions are there at transactional level? Good. Good, Yadu Bonalu. Good, Charu. Good, Vanshika. Very good. So on transactional level, assertions are occurrence, completeness, accuracy, cutoff, classification. Okay. And when I talk about on balance sheet level or balance level, this occurrence becomes existence, completeness is there, rights and obligations is there. There is one more known as the rights and obligations. Then you have valuation. Okay, the where you have a accuracy, I called it valuation for balance sheet. Okay, then you have classification and presentation disclosure together. So these kind of assertions are there for the balance sheet and P&L. Okay. Definitely, Rahul. Definitely. Okay. So let me let me discuss on assertions level more. Okay, now coming to this particular point. Okay, coming to this particular point, when I talk about a particular risk, when I talk about a particular risk, let's say risk of inaccurate invoice, on which assertion it will impact. If I post an invoice inaccurately, where it will impact out of these areas? Come on, guys. If I process inaccurate invoice, on which areas it will impact? On which assertions it will impact? I'll talk about this particular example as of now. Let's focus on this. If I process an inaccurate invoice, inaccurate entry of PO invoice, on which assertion the risk will impact, or on which assertion it will be a problem? Inaccurate. Again, inaccurate. Inaccurate. There is something similar. Inaccurate. Good, Charu. Very good. Yedu Kondalu, just one say, see the similar word is there already. Absolutely, yes. Accuracy. So if I process an inaccurate invoice, the risk is on accuracy. Okay. The risk is on accuracy. So I will have an issue with respect to accuracy. So I will place kind of a mark. You can say, okay, this is something I need to see. Okay. So there's a risk on accuracy over here. Good. Great. Anywhere else, do you see an problem? Any other assertion, do you see a problem? As of now, no. As of now, no. Okay. Now let's go to the next one. If I process an unauthorized invoice where there is a risk, on which assertion the risk is there? Processing of unauthorized invoice. Which assertion I will have a problem? If I process an unauthorized invoice, and on which assertion I will have a problem? Come on, guys, quickly. Very good. Very good, Jobin. Somewhere not. I won't say Vanshika, no. But good try. Very good. Come on, guys. If I have a risk of unauthorized entry of a PO invoice, okay, where do you think, on which assertion it will impact? On which assertion it will impact, guys? Quickly. Say, when I process an unauthorized invoice, means the invoice was not there in my name. The transaction might have not occurred. For example, I never made a purchase, but an invoice still processed in my system. So the transaction never occurred. The transaction was not in existence. Still, it was processed. Okay, fake invoice kind of. Remember, so existence and occurrence is an area where it will impact. Clear? Good, Geeta. Good, Edugonalu. Very good. Existence and occurrence is the area where it will impact. Same way, let me create one more, two more risk for you. Yep. It will be same process. Invoice processed late or untimely. So there is a risk. Okay, invoice process late or untimely. Let's say I say this is very high. Team are very slow in processing invoice and they process a lot of late invoices. Magnitude, I say somewhere it is medium. And overall impact for me is high. Okay. Now you tell me where the risk is, on which assertion. Invoice process late or untimely. Very good, Vanchika. Very good, Yudu. Good. Good, Charu. So most of you guys have said cut off. Absolutely correct. Cut off. But cut off also gives you a problem on completeness. Because if I have not processed all the invoices on a timely basis, somewhere it is impacting my completeness of the population or invoices being processed. So it's a completeness issue for me. Okay, so it will impact two assertions. Very good, Geeta. Yes, completeness. Okay, so this is, I understand. Okay, last one. Okay, invoice. Uh, okay, I'll take it in some other example. Don't worry. We have covered most. Okay, leave it. So this is how you do assertions. So same way, while I'll do it for here also on similar line, it will be. So now what I did, if you understand what I did over here is I have identified risk not onto the level of a process or sub process, but at the assertion level. I have identified the risk or you have identified the risk at the assertion level. So when in theory we read identify the risk at the financial statement plus at the assertion level, correct? You might have seen this line multiple times. This what means identification of the risk at the financial statement line level plus at the assertion level. Are you getting my point? And this is very helpful when you have to do audit or what you have to do in audit. This will be very, very useful. Same way in the control. I have this particular thing. Oops, sorry. Just a minute, sorry. Oh, yes. The Excel crashed. Let me share my screen again. Okay. The way I do on the risk side, the similar lines I do on the control side too. So when I identify assertions at the risk level, inherent risk level, I identify the assertions at the control level. Means what? If I have a risk on accuracy, my control should be, mitigating the risk on that assertion also. For example, now inaccurate entry of PO invoices. Okay, so each invoice is prepared and reviewed. So which assertions it is satisfying? So each entry is reviewed and approved by manager. So which assertion this particular control is satisfying? Come on, guys, quickly. Now let's go to the control. I am talking about this particular control. Which assertion this control is satisfying? What assertion? About what assertion this is giving you a comfort? On which assertion this control is giving you a comfort? Simple question. Definitely, Rahul, I'll share this Excel sheet with you guys for your reference. Come on, quickly. On which assertion this control is giving you a comfort? This one. Each invoice entry prepared by the accountant is reviewed and approved by the manager. Vanchika, one is correct, one is not. Very good, Rahul. Very good, Geeta. So when I say each entry prepared by the accountant is reviewed and approved by the manager, I could say, okay, this is, giving comfort to me on accuracy. Okay, this is giving comfort to me on accuracy, but this is also giving me comfort on the occurrence, because the manager will review whether the invoice is authenticated or not, is, authorized invoice or not. So a single control is giving me comfort on occurrence plus accuracy. Are you getting my point? On the same time, it is giving me comfort on occurrence and accuracy both. Very good. Some might say, this can go to completeness, cutoff, okay, and classification, presentation, and disclosure. Reason because review will cover everything. Okay, review will cover, okay, what date of invoice it is, whether it is being processed in the correct period or not, whether it is being posted into the correct GL or not. Okay, very good, Charu, very good. So a review can cover a lot of assertions. A control can cover more assertions than what is there in the risk. There is no necessity that a risk is there in a particular assertion, so the control should cover only that assertion. No, it can cover more, which is happening over here. Same way, okay, same way. Let's say, for example, this invoice process late or untimely. Now, I had a control. Let's say it is 2 and this is 3. Hypothetically, okay. I had a control that manager reviews last 10 and first 10 invoices processed during the month. Okay, so this is the control that after processing of the invoices, manager reviews first and last 10 invoices processed during the month. Now, which assertion this is satisfying? Which assertion are getting satisfied over here? Let's say this is low. After, the control, it is low, and this high and low will become medium. Okay, so which assertions are getting satisfied over here? Come on, guys. I know we are going to the basics, but again, I'm trying to create a basic and understanding that, will help you in understanding the topic in the long term. Trust me. Manager reviews last 10 and first 10 invoices processed during the month. Which assertions this is satisfying? Yedu Gondalu, 3 are correct, 1 is not. Geeta, 1 is not, 3 are correct. Good, Vanshika. It is satisfying occurrence of those invoices? Yes. Give me a minute, sorry. It is satisfying occurrence of that invoice? Answer is yes. Is it satisfying completeness? Answer is no. Because only 10 invoices are being checked, not the full invoices of the month. I will not get completeness over here. I will only get the occurrence, accuracy of those 10 invoices, cut off, and classification related to those 10 invoices. That is, I will not get a comfort on completeness. Are you getting my point? Okay. So these will be the assurance on which, I will be getting a comfort. And whatever assurance, whatever risk is there at the assertions level, okay. If you have a risk at the level of accuracy, if you have a risk at the occurrence, if you have a risk at the cutoff and completeness level, then your control should be addressing at that level itself. Or your testing also should be addressing risk at that assertion level. Now, to move a step ahead over here. Now we are talking about controls. Okay. We are talking about controls. So let's understand the type of controls also. Now, in this case, you tell me which type of controls are these. The first one, which type of control is this? Which type of control is this? Come on, guys. Which type of control is this? Do you need options? Okay. I'll give you option. The options are preventive / detective. Okay. Which type of control it is now, you tell me. The first one. Which type of control it is? Preventive detective. We have already seen the type of controls. That is nothing new that we are discussing over here. Come on, guys, which type of control is this? It's a preventive control because it is identifying a transaction or issue before it occurs. Okay. It is identifying before the issue occurs. So before getting entered into the system, it is identifying the issue. That's why it's a preventive one. Okay. Next one, manager reviews first and last and invoice process during the month. Preventive detective. Second one, preventive detective. Come on, guys. It's a detective control. Reason because it is, being reviewed after the invoice are processed. So it's a detective control. Very good job. Good, Geeta, Charu, Mohammed. Very good. Okay. So we are identifying controls based on type. Let's say as of now, IT dependency, I'll not touch this topic. I'll take it this later on, but as of now, I'll write it manual. So usually the options are manual, IT dependent, control, or you have an automated control. I'll come to this particular part, but in some time. Don't worry. As of now, no. Okay. So this is something we have done. What we have done here is we have performed a risk assessment. Any doubt till now? Any doubt? Any doubt? So did you understood? Did you understand the risk assessment that is being done over here? That we created this file from scratch and we have a lot of information in this, and we did a good risk assessment over here. What do you think, guys? Are you clear now with the risk assessment, something that is been done over here? Any doubt? Any doubt till now? So these are basically assertions, definitely, Geeta. So these are the basically assertions, on which we need to identify a risk. Okay. Assertions are kind of, areas, or you can say attributes on which are being impacted by a risk. So a risk can impact your cutoff assertion, a risk can impact your accuracy assertion. So when I say assertions, they are kind of attributes which are, impacted by a risk. And when I talk about controls and their assertions, assertions are those attributes or a control which the control addresses. Okay. So assertion is kind of attributes, you can understand. Okay. Which are impacted by what do you say? The risk. In other words, if I come back to the example of car, and if I tell you assertions over there, okay. So when I was talking about journey to the Goa, okay, assertions were there also for the trip. So let's say, for example, trip assertions. Here I will call it trip assertions. So one attribute could be timely reaching. Second is the cost. Okay. Third, you could say completion of trip. Okay. Fourth, you can say comfort. Okay. These are the assertions. Now, when I say tire puncture, okay, when I say tire puncture, it will impact your timely reaching to the destination. Okay. So tire puncture will impact here. Now, when I say breakdown of car will impact hugely here. Impact of car will might impact on your completion of trip, your comfort, your cost. So it's a very big risk. It is impacting all the assertions. And when I talk about, let's say for example, availability of the preferred meal. Now, availability of the preferred meal will not impact your timeliness reach. Okay, it will not impact your cost that much. It will not impact completion of the trip, but it will only impact your comfort. So when I talk about assertions, they are predefined. You cannot create your own assertion. Okay. Usually you cannot create your own assertion, but assertions are something which are predefined, already given for you for your reference, on the basis of which we need to assess that where the risk is impacting. Okay, on which attribute the risk is impacting. The risk of not reaching, like the attribute is not reaching or not completing the trip. So breakdown of car will impact completion of the trip attribute, but not getting preferred meal will not impact that. It will impact only comfort. So not all the risks impact all the attributes or the assertions. Any doubt? Now clear with the assertion part also? Geeta, if I might answer. Do you have any doubt? No? Okay. Thank you, Geeta. So this is something we understood from point of view of assertion. Simple. There's nothing much different. Now I want to cover some part of your module also because I want to go through. See, what we have done is practical as of now. Total practical. Okay. We saw Excel file, we saw examples, we saw, different kind of risk and assertions and everything. But how that is embedded into the standards or how that is coming from the standards, how you have to write in exam. As I said, you cannot write in the form of a tabular Excel file. Okay. You cannot give a car journey example in exam, but you have to write an answer in exam. So it is also necessary for us to understand how in a descriptive way these things fit into. Okay. How in you can say in a way of, what you say, in a writing, you have to write these things. Otherwise, what will happen is if we understand the concept, okay, but are not able to write the answer, that is also issue for us. Let me just open the module for you guys. Chapter 4, I will be opening. Just a minute. Okay. Now, let's understand how the things are there in the module and how, let's correlate what we have studied till now and what is there in it. Okay. See, this chapter will cover your risk-based audit that we saw, how we do risk-based audit, internal controls, component of internal controls, okay, evaluation of manner of evaluation of internal control system, review of internal control system, internal controls and risk assessment, frame of on reporting of internal control, and reporting on clients on internal control. We'll see that. This is something I think we have already covered in essay 265. Okay, that is being already covered somewhere. Okay. Now, as I said, materiality. We saw that is some portion of materiality, but still I will be discussing materiality when I will discuss essay 320 in detail, materiality concept. When I will complete the risk assessment, I will jump to the materiality. I'll show you how we already saw materiality some portion when we are assessing the risk, likelihood and magnitude. Okay, so we discussed whether the amount of the or the magnitude is material or not. But in detail, we will understand when we will go to essay 320. Now coming to the identification of risk. So this is something we saw. We have an inherent risk. We have a control risk, detection risk, and audit risk in total. So if something that is not detected, that is an audit risk of wrong opinion. Okay. The example that, bricks are falling one layer, second layer, something like that. So that is something we saw when we saw with an example of Excel. Okay. Components. Again, we saw these components. This is one is inherent risk. This is inherent risk. We saw control risk. That do internal controls place mitigate the inherent risk. Inherent risk kind of we saw that okay, this is a risk with response to inaccurate processing of invoice. But we had a control in front of that. Whether that control is mitigating that risk, that is something, inherent risk or control risk. Then the detection risk. We will come in this part, detection risk, but as of now, we are yet to come. So remember high, medium, low, we were talking about. So we have a low risk, moderate risk, high risk based on inherent control risk, which is a combined, of total of these two. Risk of material misstatement, combined level that we were talking about. So we discussed like there could be multiple inherent risks, business, fraud, other factors that pose a risk to the financial reporting. Same way, inaccurate processing of invoice, there's an inherent risk. Now the control, which controls are there? Okay, revenue, purchase, payroll, there could be controls, okay, on that particular part. And after considering the control and its risk, control risk, what is the overall combined risk level, risk of material misstatement we saw. Now that is a part one that we saw. This is a part two in our Excel file. Now this will be the part three that we are yet to cover. Detection risk, audit procedures, everything will be coming, but that will be part three. This is something we already discussed, the formula, audit risk, and risk of material misstatement, that is inherent risk and your control risk, the way we saw in the Excel. Okay. These assertions. Now, usually remember I told you that assertions, are required to be identified at the risk level. Risk are required to be identified at the assertion level. So basically, see, for example, management of ABC Limited may assert to the auditor that the sales balance in the accounting record contains all the sales transaction, completeness assertion. The transaction took place and valid are occurrence, and the transaction have been properly recorded in accounting records and appropriate accounting period, accuracy and cutoff. So it is another way of saying that there is no risk in completeness, occurrence, or accuracy, or we have not identified the risk. But on the other way, right, when we identify a risk, we identify on which assertion it is getting impacted, whether it is getting impacted on completeness, occurrence, accuracy, or cutoff. And these are the assertions we were talking about, which are specified in SA 315 about the transactions and event for the audit period that we saw: occurrence, completeness, accuracy, cutoff, classification. We saw assertions about account balances at the period end, and we saw at the presentation disclosure level. Okay. So if you see this particular line, you might have read multiple times. Auditors are required to assess risk of material misstatement at two levels. The first is at the overall financial statement level, which refers to the risk of material misstatement that relate pervasively to the financial statement as a whole and potential affect many assertions. Okay, whole and potentially affect many assertions. So at the whole financial statement level, which will be nothing but the combination of all the risks. Second, relate to the risk identifiable with specific assertions at the class of transaction, account balance, and the disclosure level. That the exercise we did. Okay, this is the exercise we did in Excel. Okay, identifying risk at the assertion level. That is something auditor is required to do, and we did that. So something, a chart is given, like when you identify assertions and risk at each account level. We saw one or two examples. When you do it at every process, invoicing, revenue, fixed asset, payroll, reporting, tax, a lot of, liabilities. When you identify at each level, the total of all the risk of material misstatement, you will count how many are high, how many are low, how many of are medium, what is the overall risk of material misstatement. When you total everything, when you are done with the each and every level, you will get at financial statement level overall what is the risk. So let's say, for example, you did all the risk assessment, okay, at all the processes and sub processes. Now you identify in a lot of areas you are getting high risk of material misstatement. In a lot of areas you are getting high. The count of high is more compared to mediums and lows. So you can say at the financial statement level my risk is high. But what if the count of lows are more than the count of highs and mediums? You might come up that the overall risk at the financial statement level is low or medium. Are you getting my point? So once you identify risk at each and every assertion level and the process level, you combine that, you see in a total view, in a holistic view, that how many lows, mediums, and highs you have, and on the basis of that, you assess a risk at the financial statement level. Okay, then identification, steps for risk identification. How we identify risk. Okay. So steps for identification of the risk. What is that? First, assess the significance of the assessed risk, impact of its occurrence, and also revise the materiality according to the specific account balance. So the way we did, what we did is we identified, assess the risk of significance of the assessed risk. What is the overall level basically of that risk? Okay. Now, second step is determine the likelihood of the assessed risk and impact on the audit procedures. So part 3 is yet to be, done, but this is something you can say part 3 procedure. This one is part 3 related. But this is, we already did something. We identified, determine the likelihood. We already determined the likelihood for each and every item. Then it says that document the assertion that are affected. We did in Excel. Consider the impact of risk on each assertion. We did that, whether it's impacting completeness, accuracy, cutoff. These are the assertions on which we did the impact analysis. Identify the degree of significant risk that would require separate attention and response by the auditor. Again, that is something we will see in the part 3. Once you will identify high risk of material misstatement, you need to have a separate response to that. That is something in part 3. Inquire and document the management response. Means whatever Excel you have prepared, how management is doing that exercise. Is management also preparing that Excel? If yes, then how much difference your and management Excel is? So you need to understand management's risk assessment procedure. How management is evaluating the risk. The Excel that we prepared, whether something is done by management also. How management is achieving that target or identifying this risk. So inquire and document the management response. Then consider the nature of internal control system in place and possible effectiveness of the mitigating risk involved. So routine in nature or daily or periodic as monthly. So we identified what controls are there, whether it is based on the transaction level. So let me go back to the example of Excel. Now this particular control, whether this control is a monthly control, is a transactional control, that's something is required to be understood. So I'll say frequency. So let's say this particular control over here. So what is the frequency of this control? I'll give you an option. Option will be daily, monthly, quarterly, yearly, or transaction based. So if I give you this option, okay, frequency, on what is the frequency of this particular control? What is the frequency of this particular control? Come on, guys. What is the frequency of this particular control we are checking here? Means when the control is performed. Very good, Charu. Very good, Mohammed. So this is something transaction based. What about this control? Second one, manager review last 10, first 10 invoices. What is the frequency of this control? Good, Geeta, good job in. What is the frequency of this control, guys? Very good job in. Good, Geeta. So this is something monthly control. Okay, again, this is also transaction based. So we identified the frequency of the control. The same which is there, which is mentioned here, routine in nature, occur daily, periodic such as monthly. So identify the frequency of the control. Number 2, designed to prevent or detect and correct errors. So we saw preventive and detective controls. Manual or automated. We saw whether it's a manual control or automated control, something. Okay, IT dependency column. Consider any unique characteristics of risk, if there are any. And then consider the existence of any particular characteristics of inherent risk, like in the class of transaction, account balance, disclosure, that need to be addressed. Now, that will depend upon case to case basis. If there are any specific, think about a risk specific because the risk is very complex, not able to easily identify the assertions or something like that. Kind of very complex scenario in case of a risk. Okay, but it's very, very, difficult and very rare cases. Now, examples could include high value inventory, complex contractual agreements, and all that stuff that we saw. So based on that, you perform the risk identification. We did in Excel, that risk identification. We did all these steps in Excel. Okay. For example, here illustration is given. During the process of extracting the exception reports, the auditor noted numerous purchase entries without valid purchase orders. Analysis. 40% of the purchases were made without purchase orders. Okay. Assertion validity of purchases. Account level related it is. So account balance impacted, purchase and accounts payable. And audit procedures, like this is something part 3. Audit procedures, I will come in part 3. That I am yet to discuss. But something this is already we saw, analysis, background we did for each and every control, risk and area. And again, if you see, this is the thing we are doing, risk-based approach. What is a risk-based approach? That audit should be risk-based or focused on areas of great risk. Means high risk of material misstatement. So I will identify high risk of material misstatement areas and I will focus first on that. So risk-based audit is an approach of audit to analyze the audit risk. Okay. Sets materiality threshold based on audit risk and develops an audit program. So I'm talking about part 3. Part 1 and part 2 is you identify the risk, you rate the risk, whether it's a high, medium, low. Once I do that, I go on the third part, that is I identify and I develop an audit plan in front of each of the risks. Okay. So that is part 3 I'm talking about, when I will develop an audit program in front of that risk. So till now I have identified the risk, till now I have identified the control. Now there is a part 3 which is evaluation of the internal control and then designing substantive procedure in front of that risk. And then I will say this whole sheet that will get completed after part 3 will be something your response that we will discuss and is equivalent, in line with SA 330. So again, audit risk analysis, that is will be something in part 3 we will be discussing. So general steps. If I talk about general steps in conducting the risk-based audit, is something you assess the risk of material misstatement in the financial level. This is the part 1 and part 2. Okay. Then you design and perform further audit procedures. That's the part 3 I'm talking about. And then you issue the report. And that is, again, risk assessment, part 1 and part 2. Risk response is something part 3. And you perform based on that and then you go for the reporting. If I talk about risk assessment, okay. Something if I talk about like, performing risk assessment procedures to understand business and identify inherent and control risk that we did. Identifying relevant internal control procedures and assessing their design and implementation. We are yet to assess their design and implementation, but I'll come on to that. Okay, and assessing the risk of material misstatement at the financial statement level. So the overall risk. And these are the specific communications that are required. So this is something risk assessment and till now we have covered. So the risk response part is something we are yet to cover, part 3 that I'm talking about. Okay. The reporting is after that. And then we will come to the internal control. So when I will discuss part 3, I will also cover internal control system, nature, scope, and objective of internal control in detail. So then only, we will be able to understand the internal control in much more detail. Okay. Again, the nature of scope of internal control. So nature, scope, then internal control system, objectives, we will cover at that particular point in time. Components of internal control, COSO framework kind of, so we will cover at that particular point in time. Entities risk assessment procedure. So the way we are doing as of now, identifying the risk, on the similar line, what entity is doing to identify the risk. Okay. Control activities. I will come on that. Control activities. Okay. Type of controls basically. Okay. Like it could be a performance review, it could be information processing, segregation of duties, physical controls, monitoring of controls, internal check. Everything will be, in part three, because part three is a major portion. Part one and part two is kind of, creating an understanding and basic base for the part three. Review of internal control system in that particular area. So that will be there. So this is basically, we will be covering in the next lecture in detail on this particular part. Okay. Any doubt till now? Any doubt? Let me go back to my Excel. So if I tell you here in Excel wise, what I will be covering in the next, part. When I say control risk over here, how I identified this particular risk that we need to cover. How can I say there is a control risk? So for this, I need to perform something. I need to look into something that is design effectiveness of control. We call it DE, design effectiveness. Then after understanding the design, I do something called as a operating effectiveness testing. What I will be doing with the testing of operating effectiveness. So testing required. Okay. Operating control testing. Then based on that, operating testing of control, I will get a kind of operating effectiveness of that particular control, that whether the control was operating throughout the period or not. And then now operating testing also includes the period for operating testing, period for which I am doing the testing. And I'll tell you why I'll bring the period, because sometimes, I perform testing in two phases: interim, roll forward. Okay. Then once I have a design and operating effectiveness, on the basis of that, I could say what is the control risk. So control risk is something is, based on my DE plus OE. On the basis of that, I need to evaluate the control risk. Okay. Once I do that, I do this particular thing, I get a risk of material misstatement. Then the next part that I'm talking about is the third part. Now, based on the each risk of material misstatement, what I need to do is I need to have audit procedure in front of that. What audit procedure I'm going to perform, that on which assertion that audit procedure will impact. Okay, on which assertion that audit procedure will impact. Once I have that, okay, then I could have, for this audit procedure, I could have a specific or performance materiality. I'll tell you why. I can have a specific or performance materiality for that particular area. Okay, based on which I will decide the audit procedure and I will check which assertions are being satisfied by that audit procedure. And on the basis of that, okay, I will assess the outcome over here of that audit procedure. Outcome of that audit procedure. And on the basis of that, I will say whether, sufficient, like outcome, when I say whether sufficient and like, outcome, like, whether I have identified any exceptions or not. So, except if there is an exception, I could say, I need to extrapolate the exceptions based on the materiality. So, amount of misstatement, potential, kind of, or estimated. Okay. Then, on the basis of this, I need to understand whether sufficient and appropriate audit evidence is obtained. If yes, then good. If no, then I need to think about additional audit procedures. Okay. So that is something as of now you can say that is there in the part 3. This will be something we will be discussing in part 3. These two parts here, the control related, this one, and this area. And this area is very important to understand how we do it. Definitely, Vanshika, definitely. I'll do that after the lecture itself. See, when I say risk of material misstatement at the assertion level, it means whether the risk is present at any particular assertion level or at multiple assertions. Let's say, for example, when I say this particular risk, this risk is on accuracy only, not on cutoff. So if this is a risk on accuracy, then I need to see a control on accuracy or audit procedure on accuracy. So these audit procedures and controls, everything will be on that particular level, risk level. And I need to check whether the control is on that assertion level, I am satisfying that assertion or not. Clear? Any doubt, guys? Any doubt? Any doubt? Did you get whatever we discussed today? The base that we created, understanding we created? And when I will fill this particular part also, that is part 3 I'm talking about, this one, this will become my audit program. Till part 2, it is known as risk control metrics. Once I will add part 3, it will become audit program. Okay, audit plan kind of after part 3. And if I add resource related details in this, who will perform the testing, start date, end date, when it will be performed, how many samples it will be, how many samples will be taken, further details about the resourcing and how it will be performed, it will become audit program. And the audit is done on this program basis. So a one consolidated whole file which covers everything start to end, provides each and every detail at each and every step. The way you progress, you fill out the details, you fill out the things, you assess continuously, you look onto the things whether you obtain the sufficient and appropriate audit evidence, and at the later point in time, once everything is done, you evaluate what is the total outcome, total misstatement. For example, this particular column over here, amount of misstatement, you evaluate the total of misstatement, you check with the materiality, and then whether corrected, not corrected, a lot of things are there that we will see, and I will expand this Excel file as and when we will, progress further. Clear? So something, that we discussed in the previous lecture about audit plan, audit program, we are seeing in the live. Now, what you guys are required to do as a next steps, okay, for the next lecture. Number 1, read the study material, whatever we have discussed till now in the chapter 4. Read it thoroughly. Okay, even you can read the upcoming parts. I know you will have doubts, but when I will take it practically, you will be able to correlate whatever you have read at that particular point in time. So, for example, if you have read about evaluation of the internal controls, when I will discuss practically how to evaluate the internal controls, you will be able to read that. You will be able to recollect that. Okay, I read that particular line, that what that means, I had a doubt at that particular point in time. But now with this practical example, I can understand what it was written. See, your job will be, when I will be explaining in the next lecture, will be, to correlate what I'm telling you practically, what is there written theoretically. If you can correlate both, you can write answer in exam easily, quickly, because whatever it is written, it is practically done in that way itself. I'm basically talking about logic. What is there? How the audit is done. This is logic. This is nothing, I'm doing magic or applying the provision. Okay, like income tax act. Provision says do this thing. No. What I'm doing is I'm doing the logic-based approach. I took an example from scratch. What you might have done in logically, that is the same we are doing. And that is also written in the audit. So number 1, read the study material. Read the topic that we are going to discuss in next lecture, that is chapter 4 in detail. I want you to have a reading of that. Number 2, revise whatever we did today, because this is a base. I want you to be clear on the base so that when I will take it up in the next lecture from the base, if I have to explain again the base, it will take some time. I don't want to invest again, because what will happen is otherwise, again explaining the base and then taking to the forward, it will become, sometimes becomes confusing. So that's why I want you guys to, be ready with the base, whatever we have discussed today. And then I will take it up ahead in the next lecture. So revise whatever we have discussed today and come up with your doubts. Clear? Any doubts till now? Any doubts? Also in the next lecture, or I think, wait a minute. Okay. So yes, on the next lecture, that is on the 10th Friday, we will be discussing this particular topic. We will be taking forward, and I will try to bring some questions for you guys the way it is in the exam, and we will try to correlate how the questions are in their exam, how to answer that, and what we have learned practically. Same in the next lecture of the 13th one. We will focus more on the practical questions, question solving, and solving of exam questions. Okay. Any doubt? Any doubt, guys? Any doubt? No? If no further doubts, then guys, thank you. Thank you for participating in today's lecture. I'll see you in the next lecture. Thank you very much. Ashok ji, session concluded.